Good afternoon, everyone, and welcome to the January 2020 meeting of the Audit Committee. The first item of business is the approval of the minutes. Hopefully everyone has had a chance to review the minutes. Are there any comments on the minutes? Hearing none, could I have a motion to approve the minutes? Thank you, Joan. Can I get someone to second that? Thank you, John. All in favor of approval of the minutes? Aye. Any opposed? None. The minutes are approved. May I have a motion to go into executive session to discuss the financial and credit history of particular corporations, proposed, pending, or current litigation?
Motion.
Thank you, Joan. John,
second.
I saw your hand go up. John is second, or Beryl is second. Okay, we're going into executive session. We're back in public session. I'd like to note that no action was taken in executive session other than to return to public session. And with that, I would like to turn it over to Marie Zimmerman to talk about the KPMG audit.
Right, thank you. Good afternoon, Chairman, members of the committee, and management that's here. My name is Marie Zimmerman. I'm the lead audit partner in the state on DASNY, and with me today is Dan White and Jeff Coach. Today we are presenting our audit plan for 2020. I'm going to briefly go through the KPMG engagement team, our 2020 audit plan, our information risk management, and then we'll talk about new and emerging accounting pronouncements, and then we have some information in our appendix. So moving on to page 5 of our presentation. This is our organization, our engagement team, our org chart. What I'm proud to present is the number of returning individuals to the engagement. As you know, Dave Barnes came on the account last year as our lead IT partner, as he was working and overseeing Justin Slater, and May will also be returning as our senior. We have Jeff Coach with over 10 years of experience on DASNY as our lead senior manager, and we could not let Dave Klosky go, so he will be staying on as a manager as he was further promoted in his career from senior to manager. You guys have a long history of seeing Jeff go from associate senior manager to senior manager. Now you're seeing Dave go to that process as well. And as Dave was just promoted, we'll bring on Grace Finley. We also have our returning professional matters professionals. We have our OMB actuary. We have Jeff Margaret, who assists us with new GASB implementations and technical research. And then we have Marilyn Farley, who assists us with our tax. I want to go back up to the top of this org chart and present Dan White and give him an opportunity to present.
Sure. My name is Dan White. I am the newly appointed office managing partner for the KPMG Albany office. I've been with KPMG since 1994. I said to Marie before, I'm one of 3 people on the 4th floor that were here when the building opened in 1997. But my main role as the OMP for the office is to make sure that our critical engagements like DASNY get the services, the audit team, and the specialists, particularly the specialists that are needed for some of the technical areas during the engagement. And I have an open office, and if anybody ever needs or feels that they need to reach beyond Marie or the team, I'm here and just a few floors down.
In addition, we also will be utilizing internal audit support assist as a direct assistance for approximately 160 hours for this audit engagement. We will also be proposing to utilize subcontracting firms, MWBE firms. We have proposed to utilize Long Island Financial Management and or Cadillac CPA, or team professionally called Team Avalora. And we'll be presenting throughout the audit plan their involvement. So as a part of a few of our required communications, I'm going to move to slide 7, our 2020 audit plan. The objective of an audit of the financial statements is to enable us as the auditors to express an opinion about whether the financial statements have been prepared by management with the oversight of the audit committee, are presented fairly in all material respects, in conformity with generally accepted auditing principles. We plan and perform our audit to provide reasonable but not absolute assurance that the financial statements as a whole are free from material misstatement. Our audit will include performing tests of accounting records as well as appropriateness of accounting policies. We will also perform test work over in the internal control. Moving to slides 8 and 9, here's a listing of the responsibilities. On the left-hand side is management's responsibilities and the audit committee's responsibilities. The audit of the financial statements does not relieve management or the audit committee of their responsibilities. On the left-hand side is KPMG's responsibilities. And in addition to those that are listed here, the one I wanted to highlight is we do conduct our audit in accordance with professional auditing standards, those being the AICPA and the governmental auditing standards. Moving to our deliverables, we will be providing an audit opinion on your basic financial statements on or about June 24th, 2020. Along with that, in accordance with government auditing standards, we'll be providing a report on internal controls over financial reporting and compliance and other matters based upon the audit of the financials. In addition, for DASNY, we do provide an auditor's report over your investments in accordance with the requirements of Section 201.3. We will provide a letter to the audit committee over the required communication matters listed here. If necessary or if warranted, we will provide a management letter. And then subsequent to June, we will be auditing and reporting on the 23 individual financial statements for the bond resolutions, and we plan to issue those on or before September 30th. If there's no questions over those topics, I'll turn it over to Jeff Coach to take us through our audit approach.
Thanks, Marie. So I'm on page 11 right now, which has a high-level summary of kind of the overall audit approach methodology we utilize. Our audit takes a risk-based approach where we leverage our understanding of DASNY to plan our audit focus for those areas with a higher risk of material misstatement. That starts with our annual kickoff with our entire team, including subject matter specialists and subcontractors, to make sure they all have a good understanding of DASNY's operations and the business as a whole, any significant transactions that have occurred that management's made us aware of, and just kind of that overall assessment of assuring that there's a professional skepticism as we go through the audit with that fresh lens, ensuring that we don't have any biases going into the audit to maintain our independence on an annual basis. Our team does confirm to us prior to the start that there are no independence matters before we move forward with the engagement. The other thing is that our team, as Marie had mentioned, is a reoccurring team, and that's because that KPMG has been a great place to work for a lot of people to build their careers. We're happy to bring the same team back in place, and that allows us to leverage some of the experience they've had in the past to provide the most efficient and effective audit for DASNY as a whole. Moving on to pages 12 and 13, these are some of the key areas that we intend to focus the audit on, driven by certain key areas. The first being the cash and investments. We will perform confirmation procedures over cash and investments, as we'll talk about in a second, with the trustees and custodians of DASNY. We will perform independent price testing of all your marketable securities held as of your fiscal year end. We will also take a review at some of your pronouncements as it relates to the fair value measurements, as well as perform the investment procedures Marie alluded to in accordance with Section 201.3 of the New York State statutes. With your leases and loans receivable balances, we will perform a test of the various components of the roll forward to that on an annual basis, given the complexity of the various elements. We dissect that down based on the significant elements and select samples to ensure some of those transactions are properly recorded by management from an annual basis. With bonds and notes outstanding, again, we will send confirmations to the outstanding trustees for those, agreeing those balances for the individual restricted debt issuance, as well as some of the other state debt that the state has. For some of the income statement items related to your interest on bonds and financing incomes, we'll perform various tests over those accounts to ensure the proper recording by management. And again, as well, take a look at some of the various disclosure elements as a result of some of your GASB pronouncements, GASB 7 and 23, as well as if there's any updates related to GASB 86. As noted from last year, GASB 86 had no impact on your financials, but we will meet with management again to evaluate that there is no impact. We will talk about in a little bit, there is one new standard that will be in place this year, GASB 88, certain disclosures related to debt, including direct borrowing and direct placements. So we'll meet with management and go over that and assess the overall impact. That would have any note disclosures only. It won't really impact any of your balance sheet elements related to your financials. Continuing on with accounts payables, we'll perform our typical search for unrecorded liability as of year end through the end of our field work, which typically runs through June. We'll evaluate management's assessment of the recorded liability and the unrecorded amounts to ensure there's no material elements to it, as well as look at the other type of accrued expenses management has and perform tests as deemed necessary related to those. Lastly, on the following page, we talk about some of the financial statement disclosures. We will, again, perform third-party confirmations with your attorney to ensure that all outstanding pending litigation matters related to DASNY are properly stated in your financial statements. We'll perform a confirmation with your actuary as it relates to your OPEB pronouncement and ensure that that's been properly valued utilizing our specialists internally, as well as the reported GASB 68 for pension amounts within your books. In a few minutes, we'll talk about our testing over your IT systems that are noted here, but we'll make sure that that's incorporated, including some of the automated IT controls, as well as involving our tax specialists to make sure there are no elements that would jeopardize the tax-exempt status of DASNY for the state of New York. Moving on to page 14, this is as we talked about with our confirmation process. For this year's engagement, we intend to utilize a sampling approach, where we will take your investments and kind of tier them where 100% of any state-held debt will be confirmed. This includes any City of New York debt as well. And then for the remaining debt, we will subject that to some sampling procedures in accordance with a monetary unit sampling statistical approach. This is in accordance with the AUC standard 530 related to auditing standards, where we note that this population is kind of representative of the whole population of DASNY and therefore can draw a conclusion based on a sampling approach to those overall investments. Moving on to page 16, presenting our audit timeline here. It's fairly consistent with what we had presented in the past. It's a year, almost feels like a year-round process with DASNY that we're involved. But we will be typically kicking off our general risk assessments in the February timeframe, meeting with management, reaffirming some of our understandings and some of our preliminary control test works. Starting in February, our IT folks will be involved to start some of that control testing over the IT environments while those controls are operating for DASNY during the fiscal year. And then we'll resume our work later on for the substantive test in the April and May timeframe to be able to present to the audit committee in June, as we have in the past. Throughout this process, we will be meeting with management on a weekly basis to kind of go over the status of the engagement to ensure that we're all on track, and if anything comes up, updating the audit committee about those matters on a timely basis. Lastly, on page 17 here, this is some of the information about our IT process that we'll be performing this year and the IT systems that will be in scope. There are 2 systems we have in scope, the first being J.D. Edwards and the second being SunGuard. Our approach looks at the general IT controls of the systems, looking at your information security, change management, program development, computer operations processes, as well as taking a look at any IT automated controls that management is relying on that help reduce the overall risks to your financial statements being misstated. A lot of information on our audit process. I'll ask if there's any other questions about the process. Seeing none, I'll turn it back over to Marie to go over the new upcoming accounting pronouncements.
Your favorite part of our presentation. DASNY pronouncements. The best part of this presentation right now is the limited number of new GASBs that are listed on this. I think the past couple of years there's been such a big volume of them. So I have 3 that I wanted to highlight today. There is 5 standing out there. But the 3 that we wanted to talk about starts with the GASB 88, certain disclosures related to debt, including direct borrowing and direct placement. Your footnote number 7 over debt was already pretty comprehensive. We don't believe that this pronouncement is going to have a significant impact or complexity to the change. We'll work with management regarding their footnote number 7 disclosure to ensure that it is in accordance with GASB 88. But really this GASB is really just trying to have everyone under the GASB standard have more of a consistent approach to their debt disclosures for consistency across. So not to dwell too much on GASB 88, because the big whale that's out there for GASB entities is the implementation of leases. It's establishing a single model of lease accounting and the right to use assets. That one is going to be more complex for DASNY to implement, although it's not required until 3/31/21. Because of the accounting and the changes, there will be transactional changes that it will have to be implemented as of April 1st, 2020, the beginning of your March 31st, 2021 fiscal year. So we will work with management on those. One of the good news is currently under GASB 87, conduit debt leases are excluded. That's good news for DASNY, however, your conduit debt, your debt that is state-oriented, the leases that are associated with that are not excluded. So we'll be working closely with management throughout this spring. We're not gonna wait till next year on the implementation of that. This is an area that I know the state and other states and other entities are a little bit behind the curve. So if you're sitting there as management or the audit committee thinking where we're at, everyone's a little bit behind. That's what we're hearing. They're to the point that some people have raised their hand and asked GASB to delay the implementation of this. I think, yes, we have not heard that they're going to do that delay. We don't expect that. Obviously, we can't. But I do want to just highlight of how big of a lift this is for some entities. Yeah. And then, the conduit debt, the one we've talked about a lot over the last year or so, is they actually issued the conduit debt obligations in Statement 91. As we've talked about before, the statement GASB 91 changes the definition of conduit debt, and you have to meet all the characteristics. One of those characteristics being that it has to have 3 parties involved, and of the 3 parties, they can't be related entities. So as such for DASNY, your state debt would remain on your books, but any other of the debt would fall off. As we presented in our investment, our confirmation approach, that's about 30% of your debt would come off of your balance sheet. It doesn't mean that management, unfortunately, still needs to track that information because now it becomes a footnote disclosure. So as we're working through that, we would consider that a more complex change for your entity, and that is something that's not due till March 31st, 2020, but we'll obviously be working with management timely as they start thinking through that implementation. The other 2 GASBs that aren't noted here, one is GASB 90, minority equity interest, that does not necessarily relate to you. The other is GASB 89, accounting for interest and cost incurred before the end of the construction period. I know at the end of our audit presentation last year, I talked about that GASB because although it doesn't necessarily relate to you, DASNY, it does relate to a lot of your customers, your public clients. So they, in the past, have been able to capitalize the interest that is on those bonds as it's creating the construction period. Now they'll have to expense it as incurred. It's a way to simplify it. All the pronouncements DASNY's been putting out there, they said, why don't we give you one that makes it easier for you? I don't know if a new pronouncement makes it any easier, but that was what they're trying to shoot for. Does anyone have any questions over those? Or anything else? That concludes our presentation for today. And we're happy to stay for executive session or answer any questions you may have.
Are there any questions? Meryl?
No questions from me.
Okay.
Positive.
It actually looks like it's gotten darker there.
Yes, I know. I'm going to be leaving like 6:45 just because it's getting cold actually, and I have to drive to Albany.
Okay, all right.
Just to give you a heads up. And it started later than I anticipated.
Thank all of you.
Okay, thank you.
Dan, thank you for coming.
Glad to meet everybody.
We're going to, I'm going to call for an executive session. It's going to be sort of a double secret executive session. So I'll read this little thing that I have to read. May I have a motion to go into executive session to discuss the financial and credit history of particular corporation, proposed, pending, or current litigation, the employment history of particular persons or matters leading to the appointment, employment, promotion, demotion, discipline, suspension, dismissal, or removal of particular persons. Joan, thank you. John, I noticed your hand up. Thank you. Could we retain executive staff, Karen, Jenna?
John, can you hold for a minute?
Oh, we got to vote?
We're not connected at the moment, so I cannot
Okay.
pause you.
Also, I didn't actually hold a vote. I need to hold a vote.
So if there's a way to
I have it, so.
move the agenda so that we can.
Well, he's going
start
into
on it.
executive session, so we're gonna be off anyway. So.
Yeah, So it's serendipitous.
Well,
We're back.
you-
So
are
if
gonna
you
take
want-
Are you going to take the vote that?
Yes, for executive session.
Oh, I'm sorry.
There's a motion and a second. All in favor?
Aye.
Any opposed? Hearing none. We are in executive session. We are out of executive session. Let the record reflect that no action was taken while we were in executive session other than to come out of executive session. Kathy?
Thanks, John. A quick update on our audit plan status. We're making good progress. We've completed 3 additional engagements since last month's meeting. We have 4 in process, 2 of which have an upcoming exit meeting in the next couple of weeks. And we have 2 that are not yet started that we have to begin before the end of the fiscal year. So we're in good shape with our audit plan.
Okay. Is there any other business to come before the committee? Hearing none, can I have a motion to adjourn? Joan, thank you. John, thank you. We are adjourned.